Joining me now on the phone is Gerard Cassidy. He's the analyst from RBC Capital Markets. Gerard, thanks so much for joining us. And
You're welcome.
At first glance on these results, I know you lowered your estimates for Citi before, but does this change your view on the bank?
No, not at all. In fact, our estimates were a little bit on the high side initially because we felt that the company was going to experience stronger capital markets, and our lowered estimate, which they beat, was driven by their international business.
Okay. Still concerns then on the trading revenue front then, right?
That's correct. In fact, when we saw J.P. Morgan's numbers yesterday, as well as Citi's, the good news is the capital markets businesses were better than expected, but they were still down from the seasonally high first quarter results that both of them put together.
Okay, so then where goes for Citi with trading revenue? What's gonna have to happen?
I think Citi's trading revenue, their capital markets revenues, as long as the capital markets remain robust in the second half of the year, we should see good numbers coming from Citi's capital markets area, including the trading area.
And that would then stave off all this talk about more cost cutting at Citigroup, Gerard?
I think the costs are still an issue. Certainly on a sequential basis, they grew about 5% total company versus 5% revenue growth. You like to see that revenue growth number exceed your expenses. So I think all banks, including Citi, will focus on costs in the second half of the year in their capital markets division as well.
Overseas, still good news it seems coming out from there. They're still gaining some market share. Where's the risk there overseas for Citigroup?
Citi is unique. Over 60% of its revenues come from non-U.S. sources. It is a real player outside the United States. And the one area that they do it very well in is their retail consumer banking business. In fact, that business was up 15% in Latin America this quarter and 10% in Asia.
And 10% in Asia. Okay, so, and you expect them to continue to lock down that growth?
Oh, absolutely. I mean, they are a major player in these markets. They're well respected. They have very strong market shares. Plus, they also have their transaction services. This is their cash management business that is global. The global 500 companies, they have over 70% market share. Very powerful business.
Gerard, talk to me about capital, because you heard the CFO in this release, or you saw the CFO in this release say that they're going to return capital to shareholders next year. Their Tier 1 capital ratio is going to go down to 8 to 9%. Are they on the cusp of a major, what are they on the cusp of in terms of returning capital to shareholders?
I think that's one of the real positives for this story. Currently, they pay a 4-cent per share dividend. We expect that to go to $1 next year. And the reason being is that this company's capital is very strong. One of the things we're seeing with the large banks, they are using risk mitigation strategies. They're lowering their risk-weighted assets at a time when profits are growing. So these capital ratios are going up to levels that are well in excess of the current rules. Now, as you know, we're going to see higher capital requirements by 2019. Right. Citi will have no trouble reaching those higher levels in our view.
But Citi is still having trouble, or at least the managers are still having trouble getting the stock up. It's down about 17% so far this year. So what's the catalyst then, Gerard?
I think the catalyst is going to be continue to deliver better than expected results like we saw this quarter. This company obviously has a very checkered past. This new management team, of course, is not the group that led it into the decline that it ran into. So it's just going to take time to prove to investors that Citigroup is finally back, and investors will eventually see that as they deliver on the numbers.
So time will tell. Gerard, thank you so much. Appreciate it. Gerard Cassidy of RBC Capital Markets.